We had some crazy earnings come out this week for some of the most popular stocks out there, including Microsoft, Tesla, Intel, and a lot more. So we're going to run through them. We also had GDP numbers come out for the quarter at a time when everyone is panicking about a recession. And of course, we also have the biggest gainers and losers for the week to run through as well. My name is Ale. This is your stock market weekly update. Hope you enjoy it. Let's jump straight into it. All right, and starting first here with the markets, this was a very strong week for stocks as the S&P 500 climbed about 2.5%, while the tech-heavy Nasdaq soared by well over 4% for the week. From the top, the S&P is only down about 16% now, which is not too far away from that all-time high, but the Nasdaq is still suffering heavy losses, down over 30% from its highs, thanks to so many tech stocks crashing coming off of the pandemic-fueled rally. Overall, though, it was a very strong week for the market, thanks to better than expected GDP numbers, as well as some fairly strong earnings reports from certain companies, which does bring us over to the news portion of the video now. Okay, so for the fourth quarter of last year, GDP numbers came in better than expected with a climb of almost 3% year over year, despite the heavy fears of a looming recession. As you'll recall, we did in fact get a recession in both 2020 and 2022, but have now posted positive results in each of the last two quarters. Of course, there is still plenty of time for a recession to hit later this year though, but for now we're still in the green. Turning over to earnings, this was another major week for Q4 earnings reports, with two of my personal largest investments in Microsoft and Tesla both reporting this week. Now, on the Microsoft front, it was a bit of a mixed bag as they did beat analyst estimates on both the top and bottom line, but revenue was only slightly higher year over year by about 2%, which is the slowest growing quarter since 2016, with expected revenue growth for next quarter also being very low at just around 3% as well. They also reported a drop in net income that was largely caused by laying off 10,000 workers, leading to an $800 million employee severance charge. As sad as that is for workers, it should help the company though run leaner coming out of the pandemic where they likely overhired. Speaking of which, Microsoft also noted that the bad results are being caused by the deteriorating PC market that was soaring during the pandemic, but is now crashing down as less people are buying new computers to work or learn from home, which caused the sale of their Windows licenses to device makers to fall by a whopping 40% during the quarter. Overall, tech companies are sort of experiencing an isolated recession of their own because it's so hard to compare to the giant growth they saw during the pandemic, and that's why you can see key areas here of Microsoft's business starting to slow down. For example, cloud computing went from over 50% growth down to just around 30% today. Office and Windows are also suffering huge losses, while gaming is taking a big hit as well. However, analysts are still pretty bullish on Microsoft because it gives investors a good balance of profitability with expected growth coming out of this downturn, which they also feel Microsoft is likely lowballing their future estimates of in order to lower their risk during this tough macroeconomy with, such high inflation and interest rates and the possibility of a looming recession. Plus, Microsoft is also investing heavily though in areas of artificial intelligence and gaming, which may result in more growth than people expect. On the AI front, Microsoft has been on fire lately, gaining mass praise for their investments in OpenAI, Cloud AI, and ChatGPT. And in gaming, Microsoft continues to push towards becoming the Netflix of gaming with their Game Pass subscription service that continues to break new record highs. This latest quarter, they reported a record more than 120 million monthly active users on Xbox, the whole kind of Xbox division, while Game Pass has now surpassed over 25 million paid subscribers and will likely grow very fast from here, especially if their acquisition of the gaming giant Activision Blizzard gets approved. So, Microsoft, Xbox, Game Pass, it's quickly becoming the Netflix of gaming. I mean, it has the best chance of anything I see out there. And really, those kind of two areas, I would say, was enough to surprisingly still raise the stock price by over 3% this week, despite those mixed results. From the top though, Microsoft is still down more than a quarter of its value in what is one of really the largest drops we've seen in the stock for some time. So I'm still very happy holding holding onto my shares long term. Moving on to Tesla though, they had a monster report. I mean, they really destroyed earnings, beating on both the top and bottom line with giant revenue growth of 33% at a time when most other companies are struggling to grow at all coming off of the pandemic. And Elon Musk even stated that they may be able to produce 2 million cars this year. Now, this is coming off of the recent price cuts that they made for their vehicles, which seems to be helping demand on the backdrop of high inflation everywhere else, especially in gasoline prices. And a lot of people are coming into EVs. You see those price cuts, they're choosing to buy Teslas now. And to that point of demand, Musk even said in a statement, if it's a smooth year without some big supply chain interruption or massive problem, we have the potential to do 2 million cars this year, and I think there will be demand for that too. He also noted that they're currently seeing the strongest demand in history, with orders coming in at almost twice the rate of production, which is pretty freaking crazy. Meanwhile, their automotive margins are still among the highest in the industry, and they are now focused on growing production as quickly as possible so that they can maintain their annual growth goals of above 50%, which is just unheard of in the auto industry. As a result, Tesla stock skyrocketed on the news and is now up over 40% just this month alone, although it is still down more than half its value from the top. I'll be continuing to hold on to my shares long term though on this one too. And finally, the other big name I want to dig into a little bit before we wrap up with the rest is the semiconductor specialist Intel, which is one of my newest dividend stock purchases that I've been buying recently. But unfortunately, they reported horrible earnings, like really bad earnings, that sent the stock falling over 6% on Friday, leaving them still down well over half their value from the top and at one of the lowest prices of the past decade, as they reported a miss on both the top and bottom line due to the deteriorating PC market, which was of course also mentioned in the Microsoft report. And because of that, they also lowered their guidance for the next quarter to be even worse, despite this one already seeing over a 30% drop in sales, with EPS of just 10 cents adjusted versus 20 cents that was expected. So about half of what was expected. I mean, that's really bad. Like I said, Intel blames the horrible performance on the broader market, which, to be fair, it is actually horrendous, as Gartner Research recently stated that this was the worst quarterly decline for PC sales since the 1990s, at close to a 30% drop year over year. And in the meantime, Intel's factories are now being underutilized because of that weaker demand, and is thus hurting their margins and profitability. Now, the CEO mentioned that he does expect this to turn around, and he also pointed to several cost-cutting measures in the meantime that should help them survive the current weakness in the market. But the bad report was enough to spook both investors and analysts into speculating whether the fat dividend of over 5% will need to be cut now, as it currently sits at a very high payout ratio of 75%. And if you look deeper into the financials, it's actually scarier than that, because their free cash flow actually turned negative this year due to the lower sales, as well as the nearly $27 billion of capital expenditures that they're spending on new factories in America and Europe. Now, I'm still optimistic that cash flows will turn positive again when the market recovers, and also thanks to the American subsidies from the CHIPS Act, which the CEO also noted that they are committed to paying the dividend throughout this weakness. But in the meantime, these losses are just not sustainable. And I really wouldn't be surprised if they cut the dividend at least a little bit, because it currently makes up around $6 billion of free cash flow that they don't even have. In fact, they're going to have to pay it with debt for some time until things turn around. Which, again, I do still think that Intel will turn things around. The use of technology is only going to continue to rise in the future, and there is going to be a need for more computer chips with the rise of artificial intelligence and cloud computing, machine learning, deep learning, autonomous driving, electric vehicles, Internet of Things, the list goes on. And there's especially going to be a need for American-made chips too, chips that are produced locally, which Intel is one of the few big players that actually does that. So I actually see Intel having a ton of very high success over the long term. But the problem is, here in the short term, they're going to continue to struggle for some time until this market really turns around. So can the dividend get cut? It definitely can. And it's one of the reasons why I'm not personally buying the stock at the moment. I'm just kind of keeping a very close eye on it. But if the stock continues to crash, I may want to pick up some more shares just because very long term, I think they're going to be a huge winner. I just think here in the short term, the stock can go lower. So I'm just keeping a very close eye on it. But let me know what you guys think down below. Anyway, with that said, let's finish up the video here with the biggest gainers and losers for the week. And I'll quickly mention any earnings reports for any individual stocks as we run through the list too. Let's jump into it. Okay, and starting first here with the biggest gainers, we had several EV companies rise with, of course, Tesla climbing over 30% on the strong earnings, but it was actually Lucid who saw the biggest gain of all at about a 65% pop for the week due to a new rumor that Saudi Arabia is trying to buy out their remaining stake in Lucid, which they currently own over 60% of. Now, the rumor, however, comes from a website called Betaville.com, which I've never even heard of, so I don't know how reputable that is. And I would say really that the acquisition is purely speculative at this point. It's really just a rumor. But given that the stock is still down almost 80% from the top, even after soaring by almost 90% this year, it looks like it was probably a short squeeze from the speculation that sent that stock skyrocketing. It was heavily shorted. I mean, it was like massively more shorted than even Tesla. So I think you saw a short squeeze there and the stock popped. I won't be buying any shares myself though, as I already own Tesla and NIO, and that's plenty of EV exposure for me. Apart from that though, we did also see a couple e-commerce companies rise, with the furniture retailer Wayfair climbing 36% and the online shopping platform Shopify climbing 23%. Both stocks were heavily beaten down coming into the week, but were lifted higher because of cost-cutting measures to help them run leaner, with Wayfair laying off 10% of their global workforce, while Shopify had already implemented mass layoffs of their own and is now raising prices across the board for their services. I don't personally own either stock though. We also had Western Digital rise this week by 17%, which is a famous storage and memory chip maker who also used to pay an attractive dividend before cutting it during the pandemic. I couldn't find any reason why they climbed this week though, but my guess is that it was because of the positive GDP numbers lowering the recession fears, as well as the fact that the stock had been beaten down so heavily already, currently down about half its value over the past 5 years. They are expected to report earnings next week though, and given how horrible the PC market is looking right now, I'm actually very surprised that they climbed this week. I would have thought that investors would sell out of anything PC and chip related, but it actually climbed. Scrolling further down though, there was also Seagate climbing by 16%, who is very similar to Western Digital, so I'm very surprised to see that one make the list too. Then we also had a couple Chinese EV stocks climb off the good news from Tesla, with NIO and XPeng rising about 15% each, and like I said, I do own NIO stock, so I was happy to see that. And speaking of stocks I own, even Nvidia rose this week by 14%, which I wouldn't expect considering Intel's results, but it looks like that was due to a couple analyst upgrades who are predicting a rebound in the chips market and are also praising Nvidia specifically for their heavy exposure to artificial intelligence, which of course is skyrocketing in popularity right now because of things like ChatGPT. And I'll just mention here too that American Express also rose over 13% thanks to upbeat guidance and a dividend boost, as well as both Visa and MasterCard beating estimates this quarter too, as the payment processing giants are benefiting from a return to travel and subsequent rise in cross-border payments coming off of the pandemic. I like all of them, by the way, but I only own Visa stock myself. Okay, this video is running a little long, so let's try to rapid fire through the biggest losers now, and we'll just kind of go through them quickly. Now, there wasn't as big of changes here as the biggest gainers, because of course this was overall a positive week for stocks, but we still saw a few popular ones fall, like NextEra Energy dropping almost 8% because of a rare miss on sales for the quarter. However, revenue still climbs by 22%, and overall, this is a very strong renewable energy company with a growth-oriented dividend. However, the yield is pretty small at just around 2%, and the stock price is still pretty high, so I won't be buying it yet myself. We also saw the popular toy and games maker Hasbro fall over 7% because of a weak holiday quarter and plans to lay off 15% of their workforce. The stock has also been getting destroyed recently, down about 60% from the top because of a lack of innovation and weaker sales during a difficult economy. The dividend does look really attractive though, at almost a 5% yield, but they're struggling financially with a payout ratio of almost 100%, so I wouldn't trust that dividend too much at this point. The paint seller Sherwin-Williams also fell this week on bad earnings and a weak outlook due to less people being on lockdown and having time to paint their homes, while businesses in general are also spending less on renovation because of the weak economy. Speaking of which, IBM is also cutting close to 4,000 jobs because of that weaker economy, sending their stock falling almost 5% this week, while the Scotch tape maker 3M also fell about the same amount after they too reported weak earnings, with plans to also lay off another 2,500 workers of their own. Of course, 3M is also dealing with huge lawsuits right now, but if they can get past them, this is a company that is now paying a mouth-watering dividend above 5% on over 6 decades of growth, with still a pretty good payout ratio. So I would actually be interested in buying more 3M stock if it wasn't for those giant lawsuits. But if they get past those, I think the stock is a buy. Anyway, that's going to do it for this week's update. Make sure you tune in next week. We're going to have earnings reports from some other giant companies, popular stocks reporting, including Apple, Meta, AMD, and a lot more. So you're not going to want to miss that video. But thanks for tuning in this week. Drop your comments down below. Let me know what you think about anything we discuss. Hope you're all doing well, and I will catch you in the next video. Take care, my friends. Bye-bye.